Hey everyone, and welcome back to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze setups. Today, we're putting a specific name under the microscope, one that's been lighting up our screeners with some remarkable numbers. But before we get into the details, a quick but crucial reminder, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, with that out of the way, let's talk about RGNT's Biomaterials Limited, trading under the ticker RGNT. RGNT is a fascinating company in the healthcare sector, specifically within medical instruments and supplies. They're a regenerative medicine company developing and commercializing innovative tissue repair solutions in the United States, with their flagship Darwin platform based on a hydrogel matrix designed for the treatment and regeneration of damaged tissue. Currently, RGNT boasts a relatively small market cap of $28.04 million. Looking at recent price action, RGNT has seen quite a ride. Today, it's down 11.82%, but zoom out, and you'll see it's up 3.33% over the last 5 trading days, and an impressive 76.75% over the past 30 days. Volume-wise, today saw 158,700 shares trade hands, which is significantly lower than its 30-day average volume of 11,071,293 shares. Show chart of RGNT price action. What is cost to borrow and why it matters? So, why are we talking about RGNT today? It landed squarely on our hard-to-borrow screener. This brings us to our fundamental concept, the cost to borrow, or CTB. Simply put, CTB is an annualized fee that short sellers pay to borrow shares they then sell, hoping to buy them back cheaper later. Think of it like interest on a loan. A high CTB indicates that a stock is in high demand from short sellers, but the supply of shares available to lend at is very, very low. When this fee skyrockets, it puts increasing pressure on short sellers, making it expensive to maintain their positions. These fees can even exceed 100% on an annualized basis, meaning holding a short position for a full year would cost more than the value of the shares themselves. Why this stock is hard to borrow right now? Now let's apply this directly to RGNT's Biomaterials. Our data shows that RGNT currently has an annualized cost to borrow fee of a staggering 849.9%. Highlight CTB number. That is an extremely high number, signaling immense pressure on short sellers just to hold their positions. While its CTB momentum has seen a slight dip of 8 percentage points over the last 5 trading days, the absolute level remains exceptionally high. What makes RGNT particularly hard to borrow right now is the incredibly limited supply of shares. We're seeing only 30,000 shares currently available to borrow against an estimated float of 2.5 million shares. Joe stats on screen. This tiny pool of available shares, combined with high demand, is what's driving that astronomical borrowing fee. Squeeze mechanics explained. This brings us to the potential for a short squeeze. A short squeeze happens when the price of a heavily shorted stock rapidly increases, forcing short sellers to buy back shares to limit their losses. This buying activity, often involuntary, further fuels the price increase, creating a cascading effect. With only 30,000 shares available to borrow for RGNT against the 2.5 million share float, any significant upward price movement or increased buying demand could quickly deplete that already thin supply. If short sellers are forced to cover, they have to buy shares in the open market, and with so few available for a new shorting, that demand can outstrip supply, driving the price up quickly. Our internal composite squeeze score for RGNT currently sits at 42.8 out of 100. This tells us it exhibits several components that contribute to a squeeze thesis, though it's not the highest score we've ever seen. It's crucial to remember that a high cost to borrow does not guarantee a squeeze. It can also indicate strong conviction from short sellers who are willing to pay a premium because they believe the stock will ultimately go down significantly. Dilution risk check. One critical factor to consider when evaluating a short squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This typically lowers the stock price per share and can completely negate any short squeeze potential, even with a high cost to borrow. New shares provide liquidity for short sellers to cover their positions without driving up the price, or for new short positions to be opened. We always check for this. For RGNT's Biomaterials, our screen found no recent dilutive SEC filings such as SMINUS 1, SMINUS 3, or 424B in the last 90 days. Show no dilution graphic. This is a positive sign, as it suggests the company isn't immediately planning to flood the market with new shares, which helps the short squeeze thesis for RGNT maintain its integrity for now. Again, a quick reminder, important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you be watching for with RGNT? Keep a close eye on the cost to borrow fee. Does it climb even higher, or does it start to fall more rapidly? More importantly, watch the shares available to borrow. If that 30,000 number shrinks even further, it's a strong indicator of increasing pressure. Also, monitor volume. While today's volume was low, a sudden surge in buying volume, especially on upward price movements, could be a catalyst. Significant price action, particularly to the upside, that causes short sellers to rethink their positions would be key. RGNT's Biomaterials Limited RGNT presents a compelling case for hard-to-borrow stock due to its extremely high 849.9% annualized cost to borrow and very limited borrowable shares. While the composite squeeze score of 42.8 indicates some potential and no recent dilution risk is a positive, remember the market is unpredictable. This isn't a recommendation, but an educational exploration of a stock exhibiting these interesting characteristics. If you found this breakdown of RGNT helpful, please hit that like button, subscribe for more deep dives, and let us know your thoughts or any questions in the comments below. We love hearing from you.